Morning, everyone. Good morning. Got a bit to talk about today as regards yesterday's FOMC meeting. Interesting to see everyone's take on it. Good stuff. He should have done all right. I'm always reluctant to push it because, as I say, depends on Q&A afterwards, but on the release, there should be a jump and you did get it. So if you did that, you should have come right because it did jump. I'll put the euro dollar. When was it? Yesterday, wasn't it? About 8:30. That's what happens to. Where get 8:30 from? 2000. I mean, a big one. There we are. Yeah, there you are. That was the one there. So you should have done all right. You should have made a nice profit. Yeah. So not against it. You do the PPI if you like. We just hold it on the CPI and jobs report. But when I saw it afterwards, I just a couple of cases of Q&A, but I thought maybe you should have maybe encouraged them because, as I say, as soon as released, even though it was expected, it did get a bit of a strengthening of the dollar, as you can see. So you should have got your sell, because it's obviously the euro is the base currency, strength of the dollar to weaken the euro, should have taken it in. And I expect you're out. It didn't take long to start moving back up again. So I presume you're out of it now and banked. Is that correct, Anne-Marie? Could have done better, went too far. Yeah, well, that happens. Yeah. I hate to say it, guys. I'm going to make a statement here. You don't like it. Hey, you could always have done better. Unfortunately, that's the nature of human. You're never going to get it perfect. You're not going to get that point there, guys. It's not going to happen. You always aim for it, always strive. It can happen. Let's be fair here. But I shouldn't be chatting too much about it now. I'm just very, very pleased. Chuck, you went for it and did okay. Might encourage some of the others to do one or two on their own. Yeah, quick profit. What a pleasure. But I suppose I better be quiet now till past. I'm getting ahead of myself. When you say that's fast, I've seen far faster than that. I've seen the euro dollar jump over 100 pips, literally a couple of seconds of release before it just shoots back up again. So you got to be basically a virtuoso piano player to grab it when it does that. Yeah, they would do. Would expect it. Yeah. Yeah. If one did it, why wouldn't the others? Yeah. Not always, but that's it. When I say normally, I mean it's nothing 100%. There's always some glitch somewhere. But yeah, you'd expect that on the dollar, NAS, and the gold. Yeah. Morning, I'll pass. Right, okay. I just got the euro dollar just because Anna-Marie and Dirk, her husband, decided they're going to do a straddle trade on. I presume you 10 pip above and below on the euro and did okay. As you said, could have done better, but it went so fast. Unfortunately, you can't, unless you got, let's say, some high-speed computer getting in and out with a millisecond or something. Well, you can't. But the bottom line is you got out pretty quick. You took it. And within a minute or so, you made a few bucks. So well done. So well done. So say, don't stop the guys. If you know how to do the straddle trade, you can pick out major fundamentals and do it your own back. If you get several more months, that might be a way forward to making a buck. You know what I mean? And you had fun. I like it. I like it. Yeah, fine, exactly. Well done, Anna-Marie. Yeah, because we want that support because when you're having tough times, economic fundamentals always it can get a bit despondent. I mean, if somebody else is doing well, even if it's not yourself, it can lift you a bit. So that's good. That's what I'm saying. Yeah, it lifts me as well. So quite genuine. Just being polite. Yeah, I'm bloody pleased. And you're leading the way there. So there you are, guys. If you understand it fully, if you don't, obviously. But if you understand it, there you are. Pick up PPR, pick anybody's in. If it works out for you, you might find half a dozen or more. Might get a couple a week. There you are. Especially at a bad trade, and that can just suddenly lift you, yeah? And it's quick. Don't think anyone who wants to buy a fast car to drive slowly, so that's quick. Okay, right. As you know, 8 o'clock yesterday, the interest rate stayed the same as expected. And that had a little bit of weakness on the dollar, as mentioned, and I did mention that to a couple of people, but didn't last too long in the fact that he got quite hawkish afterwards. There could be a couple more interest rate increases if it was deemed necessary going into the year. It really was talk maybe this would be the final one. A bit of expectation out for that, but he says no. He's got to stick to economic policy. And one thing, maybe I'm being naive here, but whether I'm naive or not, I do believe him. He is apolitical. He's not a Democrat or Republican. He's trying to do what he thinks is correct. Makes a bit of a joyful feeling in that sea of political corruption we have worldwide at the moment, where power matters number one, everything else comes long way duo. So number two, by the way, duo number two. So yeah. So it was slightly hawkish, and then basically what happened then was markets started jumping around a bit. So came off quite well, and then it got back up above, came to 102.70. Now it's about 103 again, 103.30 on the DXY. So asked a few people in case again. Okay. Yeah. I'll just check that. So just give me a second. Let me guy. So I couldn't find one this morning. I've got a couple I can look at if you like, but I'm a bit iffy on them, to be honest. As I mentioned to some of the other guys in the strategy room this morning, the problem we're having at the moment is we can work with the case. It makes it quite difficult and often outside your control. You can be doing very well in a trade. The trade idea was right, and funding comes in and pushes the opposite way, and that is outside of control. Sometimes you get lucky, sometimes you don't. But where the problem is not whether you're lucky or unlucky, it's the jumping around, and not so much in just the noise, but new stuff coming out. And that's why I say once you take your quick profit, make sure you're careful if you're doing a FOMC meeting interest rate decision, because the Q&A afterwards can get a lot of moving around, as you found that, Anna Marie. It can jump it around quite a lot. I always lose on meetings since joining trade room start to make money. I'm not quite sure what you mean by that, actually, to be honest. Start to make money on meetings where before you're losing. I've got the wrong understanding. I heard a question. Let's do that quickly. What was the other one? We'll do that now. Okay. It's getting very difficult to call, actually. The Swiss franc came out slightly, only 2-star, but it came out minus 0.3, and it's still going to be plus 0.1 on CPI. Less inflation. Might add to a little bit of Swiss franc weakness, but I looked at when the release came out this day, didn't have much movement. Actually, didn't really react much to it. I'm finding quite difficult. In theory, it should come off. I think it's overbought against the Swiss franc, and I think the Swiss franc is undervalued. But as mentioned by Fani yesterday, and I tend to side with him on this, rather be wary of the Swiss franc at the moment. It's behaving rather strangely. Once we can get some undervalued Swiss franc coming in, a bit of strength slightly, I think we can do good by buying it. I'm a bit wary of it. But as you're already in the trade, well, as you can see, there are sellers coming in. It seems to be holding the 50. We might get a call back, but it's a very difficult call at the moment, to be honest, Pietro, on that one. Swiss franc has given me some surprising movements. Euro CHF, I still think they could come to the party. I want 1 hour, to be fair. Sorry, I'm looking at 1 hour, beg your pardon. Just go to CAT CHF again. It seems to be range trading. I don't know where you got in. I think it might hold there for a while. We'll see anyway. But anyway, Euro CHF. I've got a feeling it might dip back below there. So I would hold on. You got your strategy, but I'm not going to suggest a trading at this stage. AUD did hit the stop loss. I think it did, yeah. Disappointing again. It was doing very well. Yesterday, it was down to just below 61, over 30 pips in profit. Some guys modified. I modified in gold. I modified them. I got kicked out. I didn't make much, but I didn't lose on them. But yeah, I be honest, I modified to protect for the FOMC meeting last night, because anybody happened there. And as I say, the good trade suddenly went. So I think AUD and particularly NZD are reaching exhaustion. In fact, some pundits reckon that NZD is going to a strong recession. I think the AUD might follow. It had big trade agreements with China, and China's battling. They've reduced interest rates slightly, and they're importing less oil. As a result, Brent and oil basically came off, and which is not that great for Aussie. So I'm looking for Swiss franc going forward strength. I'm looking for a bit of dollar strength going forward. I'm looking for AUD and NZD, and quite frankly, to a certain extent, GBP weakness coming in. But I'm not sure I'll be jumping in before the weekend. Remember, I was going to do one tomorrow, but they said no, we're closing up all classes for the weekend, including Saturday. So this is the last class before Monday. So I'm going to probably sit a little bit quietly on that. We'll discuss. You might encourage me, but just take a note of that. Well, I'm looking at, you might want to do the same. Take a note. Aussie, New Zealand sells, Swiss and US dollar strength. Once we get some confirmation going, maybe going to next week. Okay. Oh, good with that. Okay, gold. Okay, picture. I think we're on the same page. Good. Gold. Well, I'll tell you what I think. Gold. Just get a bit clearer here. Tell you what I think of gold. Leave it alone. We've taken a couple of good profits on it, especially those who modified. Not great, didn't it? TP, but made some money on it. I did anyway. So because I modified. For those who didn't, well, you wouldn't have done. Right, the basic question is where from here. Well, I'll duck the question by saying long term. Come to the non-balance. The long term, I see simple as that. Right, come to the stinker, which is the short term. Difficult. I'm ignoring the 100, not ignoring it. It's acting a little bit of resistance there at the moment. It has broken below, but I'm looking more the 50 single and the 200 simple moving average. 50 simple moving average is in the neutral zone now. I think it's getting to the stage where Sabah's come in. My only hassle is I did mention I expect some dollar strength to start creeping in with the expectation of some more interest rate rises, which is negative for gold. I'm looking at the yields at the moment on my other screen. It's coming off a bit. I personally think round about the 1930 level could hold. I'm looking at upside. Putting that all into place. I'm seeing upside, but I'm nervous going into the weekend. I think it could sideways a bit. I'm not sure I'm expecting 1960, 1970, or even 1980, the top of the range, to happen quick. But I am seeing a little bit of upside on this. Does that mean I am confident enough to recommend a trade? Well, to those who got plenty of free margin and are highly aggressive, yes, I am. If you don't have plenty of free margin and you're a fairly conservative trader and you don't have a large balance and you're not highly aggressive, I would say probably sit on the sidelines. That's my take. but I wouldn't be selling it, no. Not at this stage, anyway. I'd stay out or go and have a nibble of a buy. Anyone disagree? Anyone got any? Because remember, we're all together in this. It's very important, especially to show the newer guys how the more experienced guys can learn here and have valid opinions. So I promise you, we all benefit. I hate to admit this, I don't know everything, as we found out with a couple of bad signals lately. Do my best, but that happens. Yeah, I think I'd see some upside if you got the money, and like I just mentioned, I'll repeat it all again. But I don't mean 1870 as some sort of a target. I agree, but I don't really want to sell it there. Not enough data to give me any. I don't want to talk about it, to be honest. You say, should we wait to reach 1877? What do you mean by that? To buy it or to sell it down? At the moment, leave it alone. Unless you can afford, you've got nothing. I'm repeating myself, guys. I'll do it again. Enough free margin, highly aggressive, non-conservative. I see some upside. If you haven't got free margin, haven't got enough money, and you're not highly aggressive in your trading, leave it alone. Do not short it for the moment, in my opinion. Fair enough, Peter. Fair enough. Yeah.
Hi, Roger.
Go for it.
How are you?
Fine. How can I help you, Mr. Msuzu? I like that.
Oh, yes.
Put a ring to it. It sounds almost Italian.
Yeah.
I like it very much.
Thank you. I just want a quick one. You mentioned yesterday that you got kicked out from a fundamental, right? Does it ever happen that you set a stop loss, but because of the volatility of the market, it how do I put this? It wipes out your account, even though you've protected yourself. Does that ever happen?
Yeah, I know exactly what you mean. I want to explain that, guys. I want to spend a few minutes on this because I want people to fully understand it, because I'm absolutely convinced majority of our guys, especially guys that attend the trading room or whatever, don't understand this. You're in a leveraged market. Very, very important. I'm going to give you some understanding on this. Let's say you've got a 100-to-1 account. That means you put a marginal deposit down of 1%. Remember, you divide the margin into 100 to get your leverage. And you decide you're going to buy a R1 million house, right? Now your exposure is R1 million. You're responsible for that R1 million house. The bank's responsible to lend you the money. They want some sort of deposit or collateral, but they're not responsible for the house. You are. Very important. Right. Now you put 100 grand deposit down. That's leverage of 10-to-1. Right. Now, unfortunately, we've got some problems in the housing market in your area, Mr. John and Mary Smith. Okay. Right. And the price of the house falls by 1.5%. Okay. Now you got a 1% deposit because 101 leverage. 1% of a million is 10 grand. You've got a 10 grand deposit down, right? And that suddenly falls by 1.5%. Not only your 10 grand go, you owe 5 grand. Now, mostly the margin call kicks in very quickly. So everyone's got horrible, margin call, how awful it is. But actually, a lot of good about margin calls, because it actually, in a way, protects your account from going into a minus where you actually owe. I mean, there's all sorts of horror stories going out in the past where it says quite clear in disclaimer, you can lose more money than you put in. Now, a lot of people in derivatives don't even know in derivatives and leverage how that can apply. I'm explaining how that can apply. So if that R1 million house falls by 1.5%, that's 15,000 rand. Remember, you only got on a 1% deposit, that's 10 grand. So none of your 10 grand gone 5. Now, what you're coming back to is this point here. High volatility or closing and opening up at a very different price. Right, we'll go over this again. Right, you've just gone into gold right this instant, and I put a line in the sand so you're all on the same page. You've got to understand this. Right, that is your stop loss. Right here, this line here is your stop loss. This closes, it's now Friday, 11 o'clock. It closes tonight of this stop loss. And then suddenly, over the weekend, it's turned out some fantastic news comes into the dollar, and the dollar suddenly strengthens on opening on Monday morning. The yields go shooting up on the 10-year notes on Monday morning. This gold opens up. I'll put another line on here. Doesn't really matter. Put it there, okay? That is where the buyers and sellers are coming in. Your stop loss on a buy, remember, is a sell order. If you're going short or selling short, your stop loss is a buy order. But there's no one there to buy or sell it. The market is closed. This is where it opens. So that's where they'll get you out. Do you remember when NVDA came out with that phenomenal profit expectation, which wasn't expected at all? The market, we didn't just jump into it, but it was looking a bit iffy. And we didn't know what was going to come out as, like we don't with the non-farm, the CPI's coming out with it. And the data was horrendously different to the expectations. That's why people got bloody well caught, which we call it slippage, by the way. The jargon is slippage. That and so I don't want to frighten you. I want you to make you aware. Lack of knowledge creates the problems, the questions, the upset. With knowledge, it takes the fear out because then you understand it. So that is the basics of it. And Zuzu, I hope that answers the question. If not, I'll repeat or get somebody else to explain it because this is a very important question. That's why I'm developing it and making a bit of a noise about it. Because I know for a fact people are just not getting this point. Why I put my stop loss there and why I'm getting out here. There's no buyers and sellers there. You can only get out the market when the shop is open and there's buyers and sellers to take that position off you. And you're in a leveraged instrument. If you've got full equity and you bought Apple, 100% of it, and it falls 10%, well, you know, it's okay. It's fallen 10%. But if you've got a 2%, you've got a 100 to 1 leverage, you've got trouble because every 1% movement in the underlying instrument which you bought or sold is 100 times movement to you. And you've got to understand the pros and cons of leverage. And I know I'm actually a bit against the 5-to-1. You know, bring it against the law actually overseas because too many retail guys going to highly leveraged accounts because they don't understand the implications of it. And they're going in because I haven't got much money, so I'll get a bigger leverage, small deposit, go and buy it. Well, on a 500 to 1, you're buying £1 million house, divided by 500, 2,000 rand. Oh, hang on, I can buy a house for £1 million with £2,000. That's all I think about. That house has just got to fall by 0.004% to wipe you out and you owe money. You get the idea. Unless the margin call saves your ass, as they say. Hope that's clear. Anybody not clear, I want to explain it again. I want somebody explain it better than I do. I don't mind the ego knock if you don't understand what the hell I'm on about. More important is you understand it. A brilliant question. I hope everyone gets that. Any questions on that? Very important.
Okay, that I understood. Forgive me if you've answered this, but I want to ask on a short-term basis, right? Let's say now we're straddling. Let's say it's NFP, right? Yeah. And we do a straddle trade, and then let's say it activates the buy, right? We're in the trade, and now we're in profits. I set my stop loss, right? Let's say now I leave the trade, maybe go do something else. When I come back, the trade has gone back to my entry point and it kicks me out, right? Yeah. But because of the volatility of the market, when it kicks me out, it goes beyond my stop loss.
Unlikely. Right? So interrupt there, Zuzu. Unlikely. Where these things happen, unlikely. Where the volatility comes in that movement, it's not the ups and downs. The liquidity is there. The liquidity is there. Almost certainly not. Where the problem comes in is when it closes open. Right now it is 29 and a half minutes. Got it. I want to explain again, make sure everyone's got it. It's now 29 and a half minutes after 2 o'clock on Tuesday afternoon, and the CPI is coming out. And the CPI figures coming out are drastically different to expectation. So you've got your buy stop, out stop, or whatever. And it'll open from there on a 15-minute chart. Do a 15-minute, this doesn't really matter. And it opens up there, for instance. That would have been taken bang in, or it might not have been taken in. It might even miss your buy order. You know what I'm saying? So you might not be in the market. So because of that radical movement upwards, so if you haven't been taken in, get rid of both of them. Get rid of both of them. The reason being, the high-speed traders, the institutions put massive orders. Use the straddle trade, to be honest, and some don't. It's up to them. They do their stuff, okay? They have all sorts of far more complex derivative instruments at their disposal, which you don't have here. But bottom line is they're putting a massive, shall we say, a buy order, to make it simple, a horrendously large one. That shoots up on the premise of that information. Now, because they're high speed and getting out quickly, and a lot of it's done by computers, so they can do that speed, a lot of those positions aren't filled. So as it shoots up there, some of the unfilled position will bring it down. But as it comes down, the computer, because they're like, let's say, of a 10-minute moving average and a half an hour move, and maybe a 30-minute moving average. I mean, ridiculous, because they're high speed, multi-million dollar computer, it all works. You know what I mean? You can't compete with them, think about it. Okay, and plus a bit of a closed old boys network as well. Even if you had this stuff, we'll let you in probably. But anyway, that's another story, down corruption lines. But so what they'll do, as they got their buys triggered, they are closing those buys. Closing means selling, pushing down, and then the short sells will come in and push it back a bit. So if you get a sudden jump like that, if you're taking it, what a pleasure. Get your stop loss in or even get out if it's a massive jump, just in case you get that whiplash. Because often you get that whiplash, even because the news was correct for the jump, it was such a big one, the high speed of getting in and out with less than a second can manipulate, the wrong word. The price action could jump around far too fast for you to control. So that's another point one has to remember. Are you with me on that? But going back, sorry, before I answer that, going back to put your mind at ease, on a normal, that's just jumped up, it's take you in, the liquid is there, the market's open, the news is out, the buyers and sellers are there, so you don't have to worry about that. Okay. You might get big movements, but you'll get taken out. If you pardon the expression. Are we good, Zoo? Don't go away. This is important stuff. Are you there?
Yes, no, I'm here. I'm here. It's actually what you just said right now. The last part is actually very, very important.
Yeah, it is. Yes,
yeah,
it is.
Yeah, I didn't actually quite understand that, but I believe I do now.
Okay.
Especially if you don't, because like I said before, sometimes it does happen that I don't get filled, so I just delete both of them.
That's what you're going to do. Yeah.
Yeah.
Don't get filled. Delete them both. You cannot. I'm telling you right now. You cannot compete with institutional, fast action, multi-$100 million computers, PhD, God knows what, and a closed shop with extremely complex derivative backup where they got covered positions on them going other ways, very, very advanced call option techniques as well. You don't have the guns to compete with them. So don't get cute and try and do that. If you see those massive movements, it's massive amounts of money swishing in and out or pushing the price up and down after the news release. It jumped up. If you're filled, great. Probably you might go up further. You can put a stop in or whatever, but make sure you got your stuff about entry, whatever you do. You should be taking out hits and stop in with the speed because the buyer is flying in. You got liquidity. I want you to understand that. But if you shot up right that far, the lights start coming up pretty quickly. Grab it as soon as you can. If it does that, get your closed position up as quickly as possible and have your finger ready to close on it because it starts coming off, which is likely to happen, as long as you got the concept behind it. Remember, what drives all markets is buyers and sellers, not you think it's good or bad. If buyers and sellers decide to think a hamburger is better than a quality, healthy meal, the price of hamburger will go up. If they think it's rubbish, the price of hamburger will go down. It's all about buyers and sellers. And at that speed, don't expect to try and match it. You got a finger there. You haven't got a computer doing a billion calculations about a second. You get the idea. Of trillion, I think. Yeah, but anyway, the point I'm trying to make, have you got the concept?
No, I do. The reason I'm asking this question, right, is because I've been in a situation where I set my stop loss. Let's say I'm in profits, right? And then I set my stop loss on break even. When it comes down, at the time I thought it was because of the volatility. It kicks me out, but when I check the history, it says maybe I'm minus 90 cents. Maybe let's say my stop loss, maybe let's say I was on 0.10, for example, right?
Yeah.
It'll say maybe minus 10 cents or minus 90 cents, depending on, but it'll take me like maybe 2 pips below my stop loss, if that makes sense, which is not a big loss.
I totally understand that completely. I remember that's the spread. That's the spread. That figure might come down to this price, but that you see that level there, That
Yeah.
might be the buy or the ask price. If you're going long, you get out on the bid or the sell price. Look at that. If let's say you entered the market 1934.41 and you put your stop loss there and you stopped out, you'll be stopped out at a slight. Hang on, you won't. Yeah. If the sell gets down to that, get the figures right. Yeah. Yeah. Remember, you get out of that figure there. So if you put it there, you've got to get it above your spread. So in other words, let's say you ended at, I don't know, GBP CAD. You ended this price. If you click the button out immediately, you're going to make a 5 pip loss. You get into that, get out of that. If you're going short, you get into that, you get out of that. It's the other way around, okay? So if I say you got in, let's say at 168.70, you've now got to put your stop loss at 168.70 or better, because that has got to get to that guy there. Otherwise, the spread will affect you. I've seen sometimes guys have a stop loss, let's say on a long at 1.68783, as it says there clearly. It hits that and it comes off and they're still in. They don't know why, because that's the buy price. It ain't the sell price. You're getting out on the sell price. So when I say break even, put it above your entry to cover spreads.
Okay. Makes perfect sense. Yes, I understand. I get it.
Good.
Okay, because I always make it the exact amount I went in, and then it kicks me out at a few cents
Yeah,
less.
I know. And then that's the problem. That's the reason why.
Yeah.
That's quite straightforward. Liquidity is there. That's not the problem. But you forgot to take into account the spread. As simple as that. When you're doing the spread, just one last thing. When you're doing the spread, the question is going to be what? Well, some are a couple of pips, some are 1.5, some are 3 or 4. I suggest on currencies, not the ZAR. That's different. The normal currency, for one of a better way, 5 pips. That should cover you. In fact, use 7 pips to be absolutely sure. So put it 7 pips above. So next time, break even 7 pips above. So when you're modifying your stop loss, you want to be preferably in a new trade 30 pips. 20 is a bit close, maybe 30 pips depending on volatility. Maybe wait chips. The market price is at, let's say, 35, 40 pips above entry, and then you can put it 30 pips away, which will be above your entry, so you covered your spread. So you won't make it in English, you won't lose on the spread. Are we all clear on that question? These are good stuff. Anything else?
Understood. So I guess that drove the concern that what if now, even though I've protected, and it does that, and it basically, I know maybe it's a bit of an exaggeration, but it got to a point where I thought maybe what if it blows the account, even though I've protected. So
well, how about the question that it won't blow your account?
Yeah, no, you've answered the question, yes.
From opening up at a different time.
Yeah.
But once the market's moving, the darts release and the shop is open, the liquidity is. I'm going to be honest, I've never seen slippage, because I'm going to be honest with you, the amounts of money are tiny in comparison to liquidity out there. I'll be honest with you, Isuzu, you go with a 50 million US, not rand, US dollar position, you might get some slippage because there's not much buyers and sellers to clear out a 50. Remember, it's not $50 million of your money. If you're in 100 to 1, you've got an exposure of $500 million. Therefore, you might get slippage, because even then, liquidity might not be able to get you out. Fair enough. That's why institutions hedge positions using the derivative markets, because they can't get out at a click of a button because the position size is too large. We don't have anybody here who's got anything like those kind of amounts, so that's not a worry, as long as we're clear on what we mean by that.
No, you've answered my question. Thank you. That makes perfect sense.
Okay, hope you're all good with that. Okay, let's move back. I'll do AUD in a minute. A couple of questions came out. Leave gold for the moment, unless you're going to be aggressive. That's what I'm saying, Checo. I understand what I'm on about there. Unless you're aggressive, you got the money, blah, blah, blah. We'll repeat all over again, leave gold alone. Right, anything else moving on that? AUD, we've done that. Right, AUD, CAD. AUD, CAD, you mentioned that. Did you look at AUD, CAD? Let's just get up and I'll read it properly. Let's get it up first, okay? Right, looking like a short, only probably above 200-day moving average. Right, I want to mention some you made there above. Sorry, if I'm on the 50-minute doing it, in my opinion, actually astoundingly brilliant analysis. Just chip and say, Roger, you're on the 15-minute. Right, 200. Right, now, remember, you can get overvalued and undervalued. example, this is in the sell area down here, it's considered undervalued. It's in the buy area up here, it's considered overvalued. So I often shorten higher and buy down here to answer that question, number one. Number two, quite rightly, obviously you've been trading a little bit, Brady. Some of the stuff we come out with pretty pertinent. So there's a guy been obviously trading for a while. It's above the brown and the blue, which are the internationally universally used moving averages for buy, sell, and very strong areas. And I push them, recommend them, suggest them very strongly. I also like, it's not as powerful as the other two, but still good enough, the 100-day, and that's the black line there. The black line seems to be holding. Now, let's go back to the Aussie dollar, Brady. Quite like this, to be honest. If you're in, stay here. I'm talking about guys who are not in. I personally think, as I mentioned earlier on, I know you joined late, but I did mention earlier on the session today, I see Aussie dollar and particular hints of New Zealand might be going to a stronger recession. Aussie is suffering a little bit from the China problems they got at the moment. They've got a long free trade agreement I mentioned a few times. I think the Aussie and New Zealand are overpriced. I think the Japanese yen is underpriced. I think the dollar is going to move to, dollar is a bit of a floating one actually, but I think the dollar could get a little bit of strength creeping in after the hawkish stance of Powell. I think that's going to move to stronger territory. I think the Swiss franc is going to do the same. And I think the Canadian could go with it, especially get some more oil movements in the northerly direction, a bit sideways at the moment. So putting that together, I think that 100-day moving average is going to hold. I would agree, I see downside on that. Okay, now let's see if it's worthwhile. The problem with it, let's have a check the distance. That's only 46 pips away. The stop, make it 40 pips. It's not, yeah, it's about a 4 pip spread. Call it 40 pips away. We've got an obstacle. Now we're going down to here. We've got 100 pips away. That's fine. 100 pips is okay. The next obstacle. So you've got to say there's a 40 pip obstacle to overcome. So if you enter the trade, you might only, even if you got a risk reward of, let's say, you're risking 60 pips to make 100, you might actually risk 60 to make 40. If this holds, it bounces again. That being as it may, I do quite like it. So where can we put the stop? Let's put it above this guy here. Going back to where's that March. So put it just above this guy here. Yeah, it's an aggressive one, a 50 pip stop. So I actually quite like it as a 50 pip stop, but you might get some problems at 200, quite rightly pointed out. But you need to have a target aim to make it on, at least on paper, more than 1.5 to 1. Because I know in practice, we don't always get that target and you still need to protect yourself. And often you get risk of a 10 to make 6. It happens, I'm afraid. But with these markets being pushed around macroeconomically so much, that's just the way it is. I'd rather you modify and get risk 10 and make 6 than leave it there and then you lose 10 for a winning position. We're all clear on that. But putting that together, I have to say, I like it. Yes, Brady. Sorry it's long-winded, but I want to make sure everybody, especially newer people, understand what my attitude, or not attitude, my analysis is, so they can learn from it and see why to protect my backside if it goes wrong. Okay, are we clear on what I just said there? Any questions, any interaction on that one? What do you think of that? Happy with that? Close positions fast and stop even clicking on BS. Oh, BS, maybe I've got that. Or ST and deleting faster. What sure I mean by that, but it works. It works. Yeah, a thumbs up mean you understand it, or anybody like to do this trade. Remember, I won't be here to hold anyone's hand till Monday after 11 o'clock. Well, during the day, I will, sure, but I mean, from tomorrow, I won't be on. That being as it may, anybody like this trade? I'm going to go along with you on this one there, Mr. Brady. I know you're in big trouble, Dirk. That's the third time you're late. 3 strikes, you're out. I'm fining you 4 bottles of single malt. Not a bad idea. Might be 12. So that's good news. Yeah. It's like a guy going to say, you're about to be executed, but I'm not going to burn you. I'm just going to shoot you. Oh, that is good news. Okay, so anyone the RR up? I'm just waiting for a response. Anyone to do it? Not the demo, it's not because it's interesting, but actually going to do it. It is, I agree, yeah. Slide is a bit not short, it's fairly aggressive, this one. It's 50 pip stop, not a wide stop. It's fairly aggressive. If you don't feel 100%, don't do it. Sometimes it's boring, it's worth sitting on your hands. But I will side with you on Brady on that one. Anybody want to do it? Let's see, anyone aggressive out there? Have we got any Marines out there? We're all chickens clacking away. And don't say I'm in, and suddenly a couple of guys said, oh, I did a lot on that, found on the bloody demo. Don't BS with me that. Demos don't count. It's got to be the real money. Demos just a fear factor, scared. And the longer on the demo, the more the fear builds up. If you can't do it for real, you're kidding yourself, you know. No problem, Dirk. You're getting the hang of this. You put that up pretty damn quick. I mean, just join. Hey, you get the hang of this, eh, mate? Ooh, nice one. Okay, sorry, Brady. The guys are not too keen. Okay, I suppose because it's going to go into a long weekend, etc. Remember, the marks are open. It's just just we're closed. Yeah? Okay, we'll move on. There we are. We'll leave that one. Let's see what happens. Okay. A couple of guys joined Brent later on. I tried to suggest I don't chase it. Some guys got a 74.80 or 70. Some I asked them not to, they did anyway, which they're not happy at the moment. I think most guys in the trading would have been stopped out and a profit on this. I know I am. I think you guys should all be out on this one. Now the question is, should I go back in again? Like, I'm a little bit nervous at Brent at the moment because of the China. Remember, as I mentioned, China import astronomical amount. I think like 10 million barrels a day. So how much is that? Is it a million? Maybe it's a million. I don't know. Anyway, they import a hell of a lot. Biggest importers of the world. But bottom line is, yeah, going into. I don't want to chase it now. If it comes back here, I might buy it again. I'm certainly going to sell it, but I might buy it back down. But leave it if you're out. Well, you made a couple of bucks, didn't reach target anyway. You should be okay. Where do you put your stop? 73. If you put it down here, it's a hell of a stop. Hang on. I'm on the daily. Why is it so close? I thought it would be a lot bigger than that. Beg your pardon. Let's check it. Well, it's not so bad. How long you got to stop down there? Make it 69.40. Where's 69.40 again? Down there. It's about a $4. Yeah, it's about a $4 stop. You need at least 6, 7, 8 to make it worth your while. Yeah, you can take it up there. I suppose you could. Sorry, I didn't. I thought, hang on, not as bad as I thought. But yeah, it's not so bad. I mean, we got in at 73.10 and 72, I think it was, on the signal. Nah, I suppose it's not so bad. I'm not casual to chase it, but not as bad as I first thought, to be honest. I'm going to leave it. I suggest maybe others do, but it's not such a bad idea. If you've seen it, Brady, run with it. Okay. I know a lot of guys got stopped out. Profitably, no, don't worry. Yeah, Chantel, yeah. So as I mentioned this morning, yeah, I mean, Anne-Marie did okay. We'll do 2 a month on the trading room, but it's not to stop you guys doing it. You find other areas. Don't forget, you got to be quick on getting rid of them both. They're not filled. Say, Anna-Marie did okay on it. She did one yesterday on the Euro-dollar. That's fine. Even the PPI, you know, even the PPI can get some as well. long as you both got out in a profit, that's the main thing. You don't want a sulking spouse in your hands when one makes money and the other one doesn't. Well, it can lead up to major breakups, major arguments. Do you know something? It's the biggest reason for the divorce courts now is retail traders where the wife wins and the husband loses, or vice versa. Oh, it's becoming a major international problem. So, kidding, by the way. So yeah, I hope you both won on it on a serious note. Good. Sorry, I think it's born with a very strong sense of the ridiculous, I'm afraid. I think keeps me sane, some of these movements, eh? Okay, so good enough. We looked at CHF JPY, I remember 153, we chickened out. Pity, eh? Looking in hindsight. Did bloody well, eh? Right about these levels. Remember we looked at it, buy? I think we all chicken out. Ooh. In retrospect, what a pity, eh? Okay, yeah, AUD, CHF, leave it for the moment. Just pity about that. What was it? What was the AUD, CHF? The stop loss was at 62.09. You shouldn't have been stopped out. You should still be in it. Because the stop loss is right up here. So if the only way you stopped out of that one is if you modify your stop too close. But so be it. That's your choice. It's your money. But if you went with the signal, you should still be in it. It might come right. I've still got some open on this one. I shouldn't leave. Okay, so you shouldn't be stopped out in that one unless you modify this stop. Anyway, that being as it may, you are, you are. So I just mentioned that.
Sorry,
Okay,
Roger,
yeah.
but the signal of the 7th of June, the stop loss was 0.61552.
We got another one out there at that one on the 6th of June. That goes way back, doesn't it? Bloody hell. Ah, here we are, 7th of June, yeah. Yeah, you stopped out on that one, yeah. Did another one there, that should still be in, but anyway. So it's another one to watch a little bit, is the Aussie dollar and the Swiss franc, by the way, Mr. Farney. Yeah. Okay, yeah, right, here you. Okay, so there we are. So those still in Brent, well, you got your stop at 69 originally, so leave it there. Those who re-entered it, that's fair enough. And those are stopped out in a profit, which they would have been stopped out if they're modified accordingly, like myself. I'm not re-entering it, but till it comes off a bit more, I might consider it. For the moment, I'm not re-entering it, but if you already have, well, you should be doing okay. In fact, I know you are. Just look at the price there on the screen. 73.60 odds, so you should be okay there. Good. Okay, anything else you want to discuss? Mentioned about the FOMC yesterday. No, as expected, interest rate increase, but there was talk there could be more coming in the year, which gave a little bit of dollar strength creeping in. Yeah, I'd look at maybe NZD as a sell, but I'm a bit nervous. Probably you guys are as well. As I think there's a possibility there might be some downside here. But it might be an idea if it breaks this guy here before we get too cute with it. But I'm expecting this to come off, but highly, highly, highly aggressive. If you want to leave this alone, it's only going to be, in my opinion, for guys who have got a decent capital, decent free margin, and their trading strategies are very aggressive. If you haven't got a lot of free margin, well, I don't care how aggressive it is, don't do it. If you if you're conservative, well, again, leave it alone. But I think it's a possibility there might be some downside. But to go in now is right. This seemed to be on the 50-day, might be a little bit early, but certainly keep an eye on it. I think there's going to be some possibility downside of the AUD, NZD, to come off, and I see some Swiss strength coming in, and I see some Japanese strength coming in. Hopefully next week we get some decent trades out there. Been a bit of a tough one lately, and I'm just a bit scared sending a couple out because if they haven't done so well, I've got to somehow maintain my credibility. And yeah, it's taken a bit of a knot the last few days. Okay. Some guys got out the AUD-CHF, they modified, I know that. And some guys got out the Brent, I know that. Some guys got out the gold by modifying. So these stats and good news and bad news. But that, to be honest, all I've got at the moment. Okay, what I can do in the meantime, I'm just going to put this dollar index quickly down. I don't know who's got it, who hasn't, so I'll put it down anyway. Doesn't take long. I'm pretty sure there might be somebody there who doesn't have it. Here's your dollar index. I'm going to put down as well for you a couple other things. Give me a moment. I'm going to put the yields down. You should all know what they are. Discussed enough in the trading room. If you're not, just ask. I'll show why it's important. If not, have it there. Keep it handy. Minimize. And obviously, economic calendar. It's driving me insane. We've got to know what's going on. The Bloomberg radio, if you don't have the TV, if you ever want to see it, 9% is a bit of a boring game of stuff. Won't affect you too much, but occasionally now and again put some good stuff up. I'll just put my number down. Roger. Trading support. WhatsApp. Remember I mentioned about my WhatsApp group. If you ever want to go member my WhatsApp group, you need $2.5 grand, $150 or more, you get more signals and daily updates. Right, just get this in position. So most of the time when you open a trade, it must use open depth of the market. All depth of the market means there's plenty of buyers and sellers. That's just liquidity. So I'm not quite sure clearly what you mean by that. Everyone talks about depth of market. Market depth. Market depth basically means plenty of liquidity. Yeah. Got to get that jargon right because I might answer the question, but it's not what you meant. So I just want to make sure we're on the same page. Don't confuse it with spreads. People confuse spreads with leverage and things like that. That's completely different. Somebody said, is it more risky than 501? Well, if you're saying I'm going to risk 1,000 rand per trade, it's no more risky than 501 than 100 to 1. Well, it could be. The reason being is well, it won't, because you'll be only exposing what you're prepared to lose. And so you expose yourself to 1,000 rand. Hopefully you've done it properly. In other words, you've got maybe a 20 grand account or more, 25 or something, I don't know more. And then, yeah, whether it's 100 or 501, your position size will show you where your stop loss TP is, and you do your position volume correctly, so that's your risk. So don't confuse spreads with your risk or 501. They've got they're different. You've got to understand them. If you're not, well, this is what this discussion for. So we've got no trades out. This is why we clarify. And in Zeus, I'm pretty sure helped us all there. Not all of us, but some guys know that, but newer guys, yeah. So yeah, I'm all clear. Depth of market, Shepard, guys, it's just liquidity. Market depth is liquidity. Not the way you open and close the trade. You look, that's a spread. Make sure you understand that. And the liquidity is there for you. Trust me. There's nobody guy big enough in can worry about liquidity problems. You just don't have accounts big enough. Remember I mentioned before, there's individual retail traders there with individual accounts bigger than our entire quick trade book in the United States and Europe, etc. Bear that in mind. We are tiny, tiny, tiny in comparison to the Western and Far Eastern markets. Bear that in mind. So liquidity is not an issue.
Thank you for the clarification. Roger, when the interest rates of Europe will be as projected, What will the effect be on the euro dollar?
It'll affect it, yeah. What time is that? It's 2:15, am I right? Yeah, 2:15 today, interest rate decision on the ECB. Always remember that. Germany's important, but it's not the entire Eurozone. This is the Eurozone. Right, the expectation is going to be a 0.25% increase. If that occurs, remember, it is expected 0.25%, guys. You'll get movement. We've had movement before on the expected coming in, because it might be expected, now it's confirmed. So get some movement. If it stays the same or is a 0.5%, then you'll see movement. Remember, if you see it, if it's reduced, which I don't think is going to occur, I'll be absolutely staggered if that occurs. But if it does come off, which is almost 99.99, then if it does, you'll see a weakening the euro. If it stays the same, you might get a bit of a positive move. If it goes up, not stays the same, sorry, if it goes up by quarter as expected, sorry, not if it comes off, sorry, if it stays the same, probably get some strength. If it's as expected, might get a little bit of strength. Sorry, get that right. If it stays the same, probably get a bit of weakness. If it comes out as expected, probably a little bit of strength. If it goes up by 0.5%, that euro will jump. So that's up to you. If you want to do a straddle trade, be careful. If you can do a straddle trade, clearly do the euro dollar, 10 above and below, and just hope you clear both of them quickly. If it's neither are filled, if there are filled, clear the other ones the normal way and run with it if you get much movement. You don't say it won't happen, but it doesn't often get quite the drastic movements of interest rates in America, or well, America period. Normally have bigger movements, but it is important. Remember, it's 17 different countries, but it is the biggest economic zone in the world. People thought America, it's the biggest, but America is one country. That's why we call America the biggest. Just bear that in mind. Okay. Anything I've gone too quick or something more clarity, please say so, because some of these things are quite important, and we now have time to discuss it. Which we don't often have time if we're getting plenty of trades out. We need to be on them number ones. We know it's what we come in for. But when we get quiet patches, we can go stuff. Because I don't think you learn all this stuff in the classrooms, you know, with FX classes. Don't really go. This is more the practical side, which you got to know the bigger picture on. They often talk more about basic, indicators and basic stuff like that to get you going. This is the more we try and get a little bit more in depth here. And that's why we need to have these questions asked, discuss, and repeat if you're not sure. I'm sure we'd agree on that, guys. Guys have been tending here, learned quite a bit, I would think, on that basis. Not looking for pats at the back, but they are welcome. But we are learning on a practical nature for your sake, never mind mine.
Thank you, Roger.
You're good. Any questions, guys? Don't forget, if you're new here, you're not being left out. It's up to you to interact. If you don't interact, you don't ask, I can't assist. I can't read your mind. AI hasn't got that quick yet. Which is no good asking me on a WhatsApp when you can ask in the trading room, because I've got all the what you call it, equipment here to answer the question properly. And then I've had that a lot, come to trade and they ask in a WhatsApp, can you teach me trading quickly? I got a WhatsApp text message. Come on now. Interact. It's a forum, guys. I'm sure there's something you're not sure of. If you're nervous to speak, jot it down there. Why did you think of that? Okay, I'll come to that. Just going back, are we all good at market depth? I'm not sure what the question behind that was, but market depth is just basic liquidity. That's all I'm saying. Market depth is means it's just liquidity. You don't want to be going into. I'll give you an example. You might have heard of something called penny shares. Those are shares on the JSE that the institutions don't really trade. So they've got no liquidity. So you're going to buy a penny share, let's say it's £5 a share. and it goes up to R6 in one day. You made 20%. Yippee, they say, great, good for a sales pitch. In reality, it didn't mean anything because there's no buyers and sellers. The market price might go up, but the volumes are minute. So even if you manage to get in at 5, you might not get out at 6. There's no buyers and sellers. There's no liquidity. Okay, but that's cleared that up. You need liquidity, not just to get in, but much more importantly, to be able to get out. And that's why you will never have leveraged positions on penny shares. Because America's bigger, they have, you might have heard it's called the Russell Index. You heard of the NAS, the Dow? Well, this is the Russell Index. And it's about 1,000, it's the Russell 1000. The Russell 1000 is penny share. Now, they have more liquidity than the JSE, rather unsurprisingly. And as an index, if people want to trade the penny shares, they can be volatile and can get some nice, decent movements. It is easier to get liquidity on having an index of them rather than on the individual share. So the guys tend to buy the individual penny share for long-term, high risk, but could be phenomenal returns. Look at Apple, look at Google, start with penny shares. And some of them want to do derivatives on the shorter term, they'll trade them the Russell Index in America. We don't have such a thing over here. Just throwing it out there so you know a bit, okay? So we sort out market depth, straightforward, Lamese and Company, liquidity. We will not give you a trade in a lack of liquidity. How do you get slippage? As mentioned earlier on, is when it closes at one price, opens up the next day or on the Monday at a different price, then you will get slippage, but not when the market's open, you've got liquidity, okay? You got thoughts on the dollar. What's the volatility that Euro released today? What is the deposit facility that the Euro released today? Coming up in a minute. So not that clear what you mean by that, but you're quite confident to speak, so we go into more detail verbally, Petra. Before I do that, dollar rand. I've mentioned this before, I'll mention it again. Dollar rand is those who've got enough money to understand it, it's what's called an exotic. It's remember you've got the dollar deal with and the ZAR, and it's a lot of unknowns on the ZAR as well. It can be very, very fruitful. However, it's much higher deposit or margin, and of course the costs are much, much higher. So this is not for small accounts and not for people who are starting. This is to be traded by guys who've got reasonable accounts, brilliantly high, but reasonable accounts, understand what I've been talking about just a few moments ago, and can't afford to do it. And had cut their, whatever it is, on trading the major currencies, etc., and got a little bit of experience. Not for a guy saying, "Oh, it looks like Eskom's doing badly, we'll go and sell the rand." It's not as simple as that. If it's simple as that, believe me, it's called a no-brainer, and there's no such thing as a no-brainer in this business. If it's that obvious, everyone would be doing it, and you'd have no one take the counterparty. You've got to have a counterparty, guys. Always remember that. If it's so utterly obvious the rand is going to weaken, who the hell is going to sell it to you? Who's going to buy it off you if you're going to sell it short? Who's going to, you know what I mean? It's because it's so utterly obvious. It's got to be an area of unknown to get the counterparty to disagree with you to create the market. Please remember that. Vital. Right. Euro deposit rate, that's 3 stars. It's on the economic calendar. That's correct. That's interest rate decision. Yeah. I'll talk to something else. Where are we? Deposit facility. Yeah. Yeah. That is the deposit. It's a bit like. It's a bit like the repo rate over here. It's a deposit facility compared out the lending facility on the very short term central bankers' interest areas are put out, which then the commercial banks that add on their profit. That's where you get the prime differential between the interbank rates and the central bank repo rate. Okay. It'll affect it comes out at the same time as interest rates, so it'll affect it either way. I'm not sure we'll get quite the volatility you would on, let's say, the CPI or the interest rate or whatever on the dollar, but you might get something if you want to risk doing that. But don't overdo it. Don't go too big. Now, Christopher says, I've got wiped out. Yes, it shouldn't have got wiped out. You shouldn't even go on a position size that got you wiped out. I have a feeling you're in a demo, actually, Chris. Because I'll be honest here, you shouldn't be in a CPI from the demo, etc. I'm not keen even in coming here on demos. I want people to come with live accounts so they can learn. Because it's not happening here. But whether you're live or demo, you should not be wiped out by a position, even when you get slippage. It means you're going in too big. Not saying it can't happen with slippage, even the smaller one. I get that, especially in a highly leveraged account. But it should be very, 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 very unusual. How many times you get an NVDA jump? How many times we get 9/11? Remember? When that hit the World Trade Center, 9/11. That doesn't happen often enough. But otherwise, guy says I got wiped out. That usually doing it too much. Okay, well, we go. Please watch those volumes. Anybody not got the calculator? Remember, it's not for shares. It's only for everything but shares. Anybody not got this calculator? If you got it, great. If you haven't, it's quite simple. Go to the live chat, go to tech support, get it download onto your laptop. You say, I've only got a phone. Well, then you'll have to find some of the app store. I know you're just starting, guys, but if you try and do strategy on the phone, it's very limiting. I use it on the phone simply to check the price. Wake up at 3 o'clock in the morning or whatever and quickly check the prices. I can get in, get out, modify on there. I don't do strategy on there. You need the right equipment, you need knowledge, and you need funding. You need capital. If you're underfunded, you're under knowledge, you're under equipped, you're going to give your money over to someone who's got all those things. It's a zero-sum game. If you win 10, someone else has lost it. If you've lost 10, someone else has won it. Who's likely to beat you? That's exactly what it's for. If you can't use a calculator and you can't do anything like that, well, don't trade till you can. Does anybody there go shopping without looking at the budget? I find he has, because that's why he won't show his face now. He's beaten black and blue by his wife for buying a fancy TV, and now they can't pay rent at the end of the month. Find it not a good idea. I know him well, somebody teasing, but you get the point. I'm trying to make a joke and be slightly ridiculous to make the impact. Comedy is often a way of getting something across, or without telling you, making a bit of fun of it. But please, you don't go shopping on that budget. Why would you trade on it?
Agreed. I don't show my face because I'm in crunches. I tried to buy a trailer and she got hold of me.
Is that right? So the bit of truth there, okay. I tell you what, guys, I want some guys to join my men's liberation organization, because this ongoing bullying by women is just getting a bit much. We're very sensitive creatures with feelings as men, and we're tired of being bullied by these women. So anybody want to join the MLO, the Men's Liberation Organization, please do. I am totally shocked as Anne-Marie. Shivering with shock she is. As I say, it can be a bit of that signed me up. I like it, yeah. You find I'm a little bit of contrary. If you want to shout about women's lib, I'm going to shout about men's lib. I'd like to join, just need permission from my wife. Good. I like it, yeah. As somebody once asked me, he said, would you ever go out with a women's liver? And I said, absolutely, as long as she can cook. Because that's unfortunate. It seems to be the way it's happening in the United States. They're losing the sense of humor there, eh? In fact, I never heard of Bill Maher. He's quite a good comedian. He's very much a Democrat, anti-Trump guy, but that's his politics. I respect that. But he's quite good. And he says that comedy's dying over there because before they go out and go on a TV or go to the campuses or whatever, they have to have facts, what you call it, censorship, what they're allowed, not allowed to say, or they get into trouble. And the whole idea of comedy is to open one's mind and break those barriers, free speech, etc. So, guys, especially this business, you need to keep a sense of humor.
Very true. Relieving the stress.
Yeah. Okay. Oh, blue on your platform, Peter. That's good to see. 'Cause you're having a bit of a rough time a couple of weeks ago. That's great. That's really putting on a much better mood. I like that sort of thing. Cheers me up. Actually, it really does. I mean that. Because it gets me despondent when you get a lot of WhatsApps. Your signals are rubbish. I lost on that one. That's no good. I blew my candle on that one. You know. So it's nice to get some good stuff. As if I purposely sent a bad signal out. Finally, you understand what I mean by that. It's just a difference of a bad one. That was a good one. I'm going to send a really bad one out now. Sell this one. Bloody went up. Look at that to me on gold. I would have bought that. They got caught in the sell by mistake. That's a bad signal, but I made a couple of bucks with it. Yeah, I would say it's sometimes people give a bad one out. Yeah? Okay, anything happening on the Western Front? Anything happening on the gold? Nah, it's drifting on.
Just for the record, I put you yesterday on the spot with Ford, and when Ford opened up yesterday, it opened up at 128. So it jumped the stop loss completely, and then it started coming down, and then it went up back again.
That's confusing me a little bit there, because as I say, we know about some positive economic fundamentals coming out on their stock, but I still think that's seriously overcooked. I know for a fact, I'm not mentioning names, one or two did modify away and they're still in it, and they might get lucky. But yeah, I don't know if you did in the end there, Farley, if you're still in or not. Did you say you're still in, or did you get stopped out?
No, I got stopped out because it opened up above my stop of 120.
Okay, because it didn't quite get to 1450. Maybe did on the ask instead of the bid. Yeah, anyway, we'll see.
Yeah,
okay.
My stop loss was on the 1420 as
Oh,
per the-
1420. Oh, well, they definitely stopped.
Yeah, no, so I got totally stopped out.
I think that's way overcooked. I'm not advising you to sell up anything now, but I think it's way overcooked. I think the whole market is. I'm expecting downside big time. In fact, Ken, are you here? You're not here at the moment. Ken, are you here? Because you WhatsApped me yesterday something. ABCDFG. No, he's not here. Okay, I'll copy him if you want to look at it. Sorry, wrong one. You might have some interest on that. No, you don't. Didn't really matter too much. Just a second. Just one of the guys on here just posted this to me. Interest is not bad. But I say it's not bad. I'll be quite honest. Human emotions, because he agrees with me, or I agree with him. So yeah. But anyway, it's worth having a look at. I speak quickly. Try this guy. Americans speak very, very quickly. I hope you understand it. Might be worth having a look at. Right. Stupid question. Where do I get the online support live chat? That's quite simple. You go to the portal, or you go to the quicktrade.world website, or you go to the Stock Market College website, bottom right hand corner on the landing page. There's the live chat. Just been to the what's the signing about? Don't know. Don't mean by that. Shamani, I think, hang on a minute. I think you're part of the group. Just give me a second. Give me a moment. Just check your system here. Give me a moment. Yeah. Okay. Yeah, you're part of my group, Shamani. So you'll get signals when they're posted. I think you're fairly new now. We haven't had any today so far. We didn't certainly have any yesterday. But we'll only send out signals when you get them. A lot of guys say, I bought this expecting 5 or 6 signals a day. Farney, Brian, anybody there can send you 5, send 10 a day in terms you want. The point is, we want to try and find decent ones. And to be honest, sometimes the decent one we find turn out to be very indecent. Okay, but we do our best. That I can promise you. I don't send out what I think is rubbish. We discuss it. It's not just me. Discuss it with some of the others and in the trading room, and then hopefully it goes right. But the reason why I haven't is that then been sent out. But you will. You should have got your morning update this morning, Shimani and Company, if you're on board. But you will be. And you got my details. I did WhatsApp them to you. So anything to do with Trading Manager, you can WhatsApp me direct. Okay. Trading Manager, not Stock Market College or technical support. That's all on the live chat. Trading Managers. Okay. And don't ask me, I like this trade, show me how to place it. It's not my job. That's the job of platform trading. You need to know how to place a trade when you get the signal. I'm not, what's the signing me up about? Oh, no, that was just a joke. Sorry, Sam, you came in halfway there. No, I'm just joking about the Men's Liberation Organization. I'm starting the Men's Liberation. It's just a bit of banter. Don't worry about it. Nothing to do with anything practical. Oh, you mean that? Sign me up, Sam. That's only for guys who got $250,000 above. They go on what's called a titanium one, and that's slightly different. Okay, that's the one Peter's talking about. Yeah, he's just charged. He's put in $500,000. I put him on the special titanium group, so you get special dispensation above all. Plus, as he's signing up on the Men's Liberation Movement as well, he's getting extra top, much better served than anybody else. So that's what that was about. But I asked me not to tell you, and I damn well told you. Damn. Just kidding. No, it's just a bit of banter there, Sam. Yeah, you can. You've got my details there, Shimani. I sent them to you. I WhatsApped them to you. Pretty sure I did. Just to check. Yes, make absolutely certain, yeah. Because I remember the name well. Yeah, you even replied. I sent you my contact details, trading room, we're here. I assume you're on about platform training, send that. So I presume you know how to what money will work the platform. And I've uploaded you my Q2 VIP group as well. That's fine. So got my WhatsApp number, there it's all. Okay, question on robots, guys. We don't have it on this platform. Other platforms sometimes do. Thing with robots, I'm far from knocking them. Some guys trade with them, some guys be successful with them. And they can very expert advisors is another way of putting it. Okay, the robots, right? They work on certain what you call it, indicator algorithms placed on it. Remember, at this stage, we're all talking about artificial intelligence. We're not that intelligent yet; they can think. So often, I don't know, maybe the program's getting better. They won't know about CPIs or jobs reports, anything major coming out of the fundamental front. They'll work on, let's say, 21 moving average crossing a 50, or I don't know, whatever they do. They're worked out by clever guys who put in certain algorithms on robots, which they sell to you, and then they place the trades purely on technical movements, often with some success. The problem being is you can't ask their opinions on fundamental and say, steer clear for the dollar at the moment because the jobs report's coming out in an hour's time or whatever. They won't know that. Number two, the problem is, again, the problem is people don't do the maths. They say they want something for nothing. So they put peanuts in their account. Then they go and buy a robot. I was going to sort them. The trouble is the cost of the robot, how can it be justified by the profits in the tiny account? Because if you haven't got much money in there, you're not going to make much money. Okay, it might build up over a long period of time. I've got a problem with that, but certainly not the short term. Number two, you need a decent amount in whatever a decent amount most to represent. I personally not below 25 grand, in my opinion, absolute minimum, because you've got to be able to have the downside. A lot of them work on, let's go to gold. A lot of them are quite popular on gold. They might say, this got a bit of support here, we'll buy it. A couple of moving averages across, and we've got a MACD or a relative strength indicator, whatever, it's crossed and it's up, buy it. And it comes off a bit. So what they'll do is they'll buy a bit more till it goes further up. So you've got to have enough money for a reasonably decent drawdown before it often works in your favor, which of course you cannot do if you've got a small account. You can't do that. So yes, they have their uses. Yes, you need a bigger account. Yes, you've got to understand they don't know when the CPI is coming out. It's purely algorithmic trading, if you like. And number four, we don't have it here anyway. So yeah, simple as that. Hope that makes sense, Martin. Okay, thanks, Anna Marie, and yourself. Have a nice long weekend, guys. Okay, just getting back to Martin there. It makes sense? You got it, okay. Just remember, guys want to sell you the product. What do they want to do? They want to sell you their product. You say, oh, I've only got £2,000, will it work? Well, of course it's going to work, because I want to sell you that product. I'm just saying to you, fine, nothing, I'm not knocking the product. Just remember, the guys wants to sell it to you, so you slightly biased in that sell favor. Business, it's understandable, it's not knocking it, fair enough. Just means you've got to understand the parameters before you jump in. And a lot of guys buy it, like most things before, on the dream of something for nothing. I want a higher leverage account. I'm being told by the salesman you're getting horrendous returns on it. Anything to get away from the fact you've got to do a bit of work, bit of discipline, bit of learning, and need capital. Those are all horrible things, you know what I mean? That, you know, salesman sell. I've been salesman. No, you sell the dream. Here, I'm trying to sell the practicality of reality. Not trying to spoil a dream, but to make the dream come true. There's a bit of boring old effort's got to be put in, and I wouldn't be to sell if I just talked about effort all the time. And anybody knows, got a degree, you know, it's the effort to get it, you know, it's like anything else. And unfortunately, there is a lot of desperate naivety out there, desperate people, rather naive, expecting to get some sort of quick salvation to find that problem. That's why I often say the lottery is often called about a tax on the poor, because they've been buying it on a desperate opportunity to make them 20, 30, 40, 50, whatever it is, million rand. But of course, millions of them lose their 10 rand, which often they can't afford. So you've got to remember the three things: knowledge, right equipment, and capital. If you're undercapitalized, you're going to battle. If you haven't got knowledge, you're going to battle. Haven't got any equipment, you haven't place to trade anyway. Well, that's the idea. That's what I would use. If I use a robot, guys, well, what the hell have I done that studying for? And at this stage, AI can't think as yet, despite all the fuss. It might come down the line, I don't know. But I know that the non-farms is coming out in 10 minutes' time. I know the CPI, I know the Euro's coming out, whatever. Yeah. So I don't use them, but they've got their uses, like everything else. The secret traders make the effort, quite frankly, Martin, like everybody else. But everyone's looking for shortcuts. That's where the problem is. Most of the poor in the world are looking for the shortcuts. Ever seen the comedy Only Fools and Horses, the UK 80s comedy? Only Fools and Horses is called. The saying is Only Fools and Horses work. Now, there was old Del Boy Trotter, his little buddy business there, is always coming short. He's always looking for the quick, no effort shortcut race to make a quick buck. And that's unfortunately doesn't all, sometimes it does, but mostly it doesn't. Okay, and Zuzu, great. So you've created a lot of value for me to help the others as well. Thank you very much. Guys,
the main thing about robots is they haven't got any emotions, so they don't want to take shortcuts. They're not lazy. So yeah, they don't need sleep.
Yeah,
that's the biggest advantage of it.
Yeah, I'm sorry, should have mentioned that. Yeah, the major advantage of a robot is it doesn't go on strike, it doesn't eat, it doesn't sleep, and it has no emotions. So it doesn't take your position out too quickly. It works purely on the logical basis. Absolutely, that's one aspect. I say it's like anything else. It's good and bad in everything. But most people look for the holy grail of the 100% hits. Unfortunately, it doesn't happen. And I hear say robots produce 90% and all that. I haven't seen anybody yet over a period of time, I'm not talking about a week or two, over a period of time, get a 90% hit rate. People ask me, how do I do? I say over a period of time, I aim at 2 out of 3 to win, obviously. I can just sum it up again. I'll say it probably as much as I can to get it through to you guys. If you expect some for nothing, it usually ends up in tears. It's worth 10 rand because it's worth 10 rand, not 100. That's why it's selling for 10 rand. Hey, special price for you. It was 100 rand, I'm selling for 10. Why? Because believe me, if I get 100 rand, I'm going to sell it for 100 rand. Why am I doing you the big favor? Yeah. And that's why I'm for them, but I'm a little bit against guys selling to guys who've got very little money, very little understanding, because it normally don't have enough for the drawdowns on it. We had a guy, I don't know, he's disappeared to actually. He used to come in here quite regularly about a few months ago. And he used a robot. We might get a real little son in there. And he seemed to do okay. But anyway, we don't have him here anyway. So you want him, you got to go somewhere else. And then the stinker is, which one do you buy? You know, there's hordes of them out there. Which one do you buy? And the more expensive ones, not instead of the better one. What do you buy? Morning, Wandili. You've just joined us, have you? Okay, hi. How's it? You just joined us. We're about to wrap it up. Like, I've just got something just flashed across here on my screen. Take a lot for an email. Roger, wishes do come true. What does that mean in English? It means they want to sell me something. Get like on Sell C, you know, your lucky day, or this is some wonderful thing, or you're getting this for free, or you could win $1 million, or whatever it happens to be. Delete. Well, that basically means what it says, boom or crash. You're going high risk, you're going everything, boots and all. I've got $5 grand in my account. I'm going to really overexpose because I'm convinced gold's going to go up, put the whole lot in, and it booms or you crash. Booms and crash sometimes happens when you get a lot of, shall we say, lack of stability in markets. You get a bit of a boom and crash there, I suppose. But basic means it's enormous ups and downs without much stability. You see, a lot of guys come in because obviously when they come into this, they want the quick buck. Who doesn't? Let's be honest, who doesn't? Anyone here want to be a millionaire in a year's time or by tomorrow? Clearly, everyone wants tomorrow, obviously. And unfortunately, they overexpose. Yeah, to try and attain it, they take unbelievable risks. Like putting the house on rent. They go home, now they've got 2 houses. Wonder why they get a snot clock from the spouse, because the spouse says, what happened if black had come up? Now we're homeless. You know what I mean? So if you want to make an astronomically quick buck, you've got to take astronomically quick risk. And if you can take it, great. But if it comes back and bites and you're out of house and home, well, all due respect, that's your fault. Biggest enemy, quite right, as Farley says, most of us don't have it, is our emotions. We're fixated on what we want, but we don't spend any time thinking, what does the other person want? Or what do we want to give to get what we want? And that's why we often buy into sort of pyramid schemes and all sorts of funny things out there. Hey, Chantel, hey, I've got this wonderful investment opportunity for you. You can double your money in 1 week. Chantel should turn around and say, Roger, then why are you telling me about it? Why don't you grab all of it for yourself? You know? Hey, Chantel. And work on percentages, guys. You know, work on percentages. If you put in 20 grand, don't think you're going to make 20 grand a month. Nobody's going to make 100% a month consistently. It's impossible. We all do. That's emotions, Derek. We're all don't care how clever you are, whatever. Our emotions, unfortunately, something for nothing. It's all written myself many times in the past. Just put an old man's head on his shoulders there. All done it. Saw the fantastic bargain and think this is all right. You know, I'm getting a 100 grand product for 10 grand or whatever. Yeah. Anyway, coming up to 11. Any other questions on the trading? Anything else? I'm not sure. Again, a moment. If I see some this afternoon, we'll get it out. But didn't find normal a good way to get trades out. Isn't the trading? We haven't found anything. So you know, it might be going into a long weekend, a quiet day. Just bear that in mind. But don't worry, you might get a lot of options next week. Good ones. I'd rather good options a week than 20 opportunities. You know what I mean? Quality, not quantity. Okay, guys. Have a good day, Chantel, Dirk, everybody there. Enjoy your long weekends. Hey, Anthony and company. Thanks for the excellent questions, Zuzu and the others. And let's have, yeah, absolutely amazing. Yeah. And don't forget, if you've got $2.5 grand or more, you want to be a VIP, you got my number. Just let me know. I'll check it and then I'll update you if the money is there. Okay. Cheers.